In this week's tip of the week, we're going to focus on how to correctly apply a Fibonacci retracement to a chart. We're going to take a look at gold. This is a December gold contract, and you can see a meteoric rise to prices above 2,000 and then a break back down. And the way I would apply a fib on this particular chart would be to activate the actual drawing tool, and then I'm going to select fib retracement in this list of options, and it's already actually selected. I'm going to go ahead and change some of my settings. I'm going to make the background black. I'm going to keep the actual lines themselves white, and then I'm going to go to the settings and make sure I have the correct percentages. I don't want to see minus numbers, so I'm going to unselect those, and I don't want to see positive numbers over 100, so I'm going to go ahead and unselect those. I'm going to hit done. So now the last thing I have to worry about is what kind of line size and type I want. I'm going to keep a thick one here so we can see it pretty good on the video. I'm going to go ahead and look for the high of the move. I'm going to position my mouse. I'm going to click at the high. I'm going to drag all the way down to the low. Click again. So I've just clicked and clicked. Let me move this over a little bit, and I added a Fibonacci retracement, high to low. And you can see the 0% here is, let me get rid of the drawing tool, the 0% here is at the bottom. 38.2% retracement is the first area line of interests. 50% retracement is the second line, and 61.8% is the third line. At the top is 100%. And what we see here is the market peaked out and then retraced back down. It's called retraced back down to a low, and then gained momentum back up over the last few days. And you can see the areas to where it went. 38.2% is often used as a price to take advantage of a retracement. In other words, a bearish trader might say, hey, I want to go ahead and sell a contract short here. Let's take a look how you would do that. I'm going to click on the yin and yang button on the right hand side, and I'm going to click sell. I would position this, if you're an aggressive trader, to place the trade right at or near the 38.2%. If you're a more conservative trader, I would place up above or around the 50%. That's more conservative. You're waiting a longer period of time to try to get a better fill on a short position so that this would continue, if you expect this to continue into a bear situation, or at least more of a pullback situation. 68.1%, once we have a candle close above that, in my opinion, then the retracement is over and the original trend is starting. Hope that helps.